This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil eased on Monday, with global benchmark Brent holding below $80 a barrel, as concerns over economic troubles in top oil importer China dampened global demand sentiment and offset supply offset risks in the Middle East. Data from China last week showed the country's economy lost momentum in July, with new home prices falling at the fastest pace in 9 years. Chinese refineries sharply cut crude processing rates last month on tepid fuel demand. Brent crude futures dropped 52 cents to $79.16 a barrel by 11:35 a.m. Eastern Daylight Saving Time, 15:35 GMT. U.S. West Texas Intermediate crude futures were 50 cents lower at $76.15.
U.S. crude and gasoline stockpiles were expected to have fallen while distillate inventories likely rose last week, a preliminary Reuters poll showed on Monday. 5 analysts polled by Reuters estimated, on average, that crude inventories fell by 2.9 million barrels in the week to August 16. The poll was conducted ahead of reports from the American Petroleum Institute Industry Group, due at 4:30 p.m. Eastern Daylight Saving Time, 20:30 GMT, on Tuesday, and the Energy Information Administration, the statistical arm of the U.S. Department of Energy, due at 10:30 a.m. Eastern Daylight Saving Time, 14:30 GMT, on Wednesday.
Moving on to the top news in the energy sector.
Russian oil companies have boosted oil refining volumes this month as Gazprom plants ramped up output, daily newspaper Kommersant reported on Monday citing unnamed sources. The increase suggests that Russian oil refineries have managed, at least partially, to recoup losses related to Ukrainian drone attacks and technical outages. Russia last week extended a ban on gasoline exports until the end of the year to maintain stability in the market during a period of increased seasonal demand and scheduled refinery repairs.
China's gasoline exports fell 35.7% in July from a year earlier, customs data showed on Sunday, as refiners lowered crude runs and held back from shipments due to weakening profit margins. Gasoline exports stood at 790,000 metric tons last month, or 5.77 million barrels per day, data from the General Administration of Customs showed. China exported 1.22 million tons of gasoline in July last year and 930,000 tons in June. Motor fuel exports remain capped because of weak margins and production, due to refinery run cuts, said Emma Lee, senior China oil analyst for Vortexa. Next, we have the top news in metal markets. Dalian iron ore futures prices retraced earlier losses on Monday, as firmer steel prices and revived hopes of stimulus in top consumer China added support to the volatile market. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.71% higher at 712 yuan, $99.70, a metric ton. The contract hit its weakest level since August 2023 at 688 yuan and 50 fan earlier in the session. The benchmark September iron ore on the Singapore exchange was 3.14% higher at $94.90 a ton, as of 0740 GMT.
Indian metal and mining companies' operating costs are likely to rise significantly if state governments impose additional mining taxes in the wake of a Supreme Court ruling, Fitch Ratings said in a note on Monday. India's top court late last month upheld the right for state governments to levy taxes on minerals extraction and last week allowed them to do so retrospectively, dating back to April 1, 2005. The taxes would be paid over a period of 12 years in installments starting from April 1, 2026, the court ruled. The case followed a long-running dispute between Indian states and the federal government over states' right to impose taxes on minerals.
We will now look at the top news in the agricultural sector.
Russian wheat export prices declined last week amid lower global prices and weak demand, as analysts expect new crop supplies to increase and exert further downward pressure. The price of 12.5% protein Russian new crop wheat scheduled free on board with delivery in late September was $218 per metric ton at the end of last week, $3 lower than the week before, according to consultancy IKAR. Sovcon put the price of wheat with the same protein content for nearest delivery at $219 to $221 per ton, down from $220 to $223 per ton at the end of the previous week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.